When it comes to budgets and how much someone can save, housing is one of the biggest expenses to manage. No wonder people have so many questions about choosing the right mortgage. Most people find themselves choosing between a 30-year or a 15-year mortgage. Personally, I'm a big fan of the 15-year mortgage. Before getting one for yourself, it's important to understand what you're getting into. In this video, we'll review the pros and cons of a 15-year mortgage and how it compares to a 30-year mortgage. Hey everyone, this is Andy Hill from Marriage, Kids, and Money, a channel dedicated to helping you strengthen your family tree so you can live financially free. If you like what you hear today, please consider giving me the YouTube triple thanks. That's hitting the like button, subscribing to the channel, and then commenting down below. Thanks. Okay, what is a 15-year mortgage versus a 30-year? Well, typically when people refer to a 15-year or 30-year mortgage, they're talking about a fixed rate mortgage. With a fixed rate mortgage, the interest rate never changes for the whole life of the loan. That means that your lender charges you the same amount of interest in year 1 as they do in year 15 or even in year 30. That makes it simple to know how much you need to pay each month. Most people opt for fixed rate mortgages, but where they disagree is the length of the loan. That's just a fancy way to say how long you want to pay off your house. In some instances, people choose a 30-year mortgage. That means they're going to spend the next 3 decades paying off their house. Other people cut their debt freedom journey in half by selecting a 15-year mortgage. Can you tell which one I like? While a 15-year mortgage definitely has its advantages, it's important to really understand all that comes with a 15-year mortgage before choosing one. Let's start with the advantages of a 15-year mortgage first. Pro number 1, grow your home equity faster. Home equity isn't just something you put on a spreadsheet, though that does feel pretty great. Equity in a house can be used for a home equity loan or for a HELOC on a home equity line of credit. Either way, you can use equity to cover renovations at your house. Other people use it to pay for college or to get a handle on other high interest debt that they've got going on in their lives. Having more equity in your home can also work in your favor if you find yourself moving primary residences or getting into rental property investing. Even if you don't use your equity in your house, reaching debt freedom faster can be incredibly rewarding. Pro number 2, own your home sooner. I always had a sense that I wanted to truly own my home sooner, but I couldn't imagine how fantastic life after a mortgage would actually be. More time freedom, more options, and fewer worries. If you're ready for life after a paid off mortgage, then a 15-year mortgage might be the right move for you. By definition, you own your home sooner with a 15-year mortgage, twice as fast, in fact. That means you have more time to invest, more time to give back, or more time to travel. Basically, becoming mortgage-free faster means that you have more control over your money and your time. Pro number 3, pay less money over time. The faster you pay off your home, the less money you pay in interest. Opting for a 30-year mortgage means that you are planning to take twice as long to pay off your loan. It also means that you're agreeing to pay a lot more money in interest. As an example, let me show you what our mortgage situation looked like when we were paying off our 15-year. We went with a 15-year mortgage at a 3% interest rate with a $195,000 original principal. If we let the loan play out for the entire 15 years, we would have paid $47,000 in interest. Our other option was a 30-year mortgage at a 4% interest rate. If we let that loan play out for the entire 30 years, we would have paid $140,000 in interest. Almost 3 times as much interest. Ugh. The fact that a 30-year mortgage costs so much more money over the life of the loan is one of the most compelling reasons to look at a 15-year mortgage instead. If you think a 15-year mortgage is right for you, run your numbers with a company called Credible. They help you compare rates across multiple lenders to get you the best mortgage possible. See how a 15-year compares to a 30-year within their tool? Taking a look at the numbers for your specific situation can really make the pros of a 15-year mortgage pop. Okay, let's review some disadvantages of a 15-year mortgage. I don't want to be too advantagey, so let's talk about the disadvantages. Con number 1, limited house hunt. In any housing market, a buyer wants to keep their options open, right? However, some people might find that a 15-year mortgage actually limits their options. Since the monthly payments are higher, you might find yourself qualifying for a smaller loan amount. That could price you out of certain neighborhoods or keep you from getting that extra bedroom your family really wants. Of course, other people would argue that this actually ensures that you aren't buying more house than you actually need. Con number 2, larger payments each month. When you compare to a 30-year mortgage, a 15-year mortgage is going to require you to make larger payments every single month. For example, our 15-year mortgage payment without taxes and insurance at a 3% interest rate was around $1,350 on a $195,000 mortgage. If we would have gone with that 30-year, like we talked about earlier, at a 4% interest rate, our payment would have been around $930. These larger payments mean that more of your budget is consumed by housing costs each month. That's especially true when you factor in property taxes, homeowners insurance, and possibly even PMI, private mortgage insurance. When so much of your budget is consumed by housing costs, you start to feel a little house poor. And based on my first housing experience, that is definitely not something you want. Con number 3, less budget wiggle room. What's the biggest downside to finding yourself in a situation that makes you house poor? Well, with less budget wiggle room, you might find yourself having a harder time covering other expenses or saving for other goals or paying off other debt. You don't want to buy your dream home only to realize you can't actually afford to furnish it or even order pizza every once in a while. But for some people, a 15-year mortgage can force you into that situation, especially in a hot housing market, kind of like what we're having right now. One helpful way to combat this is to remind yourself of other housing expenses you want to account for. Some of these expenses include home repairs and maintenance, upgrades and renovations, furniture and decor, landscaping and lawn care, property taxes, homeowners insurance, PMI, and utilities. Knowing how these categories fit into your budget should help you see how a 15-year mortgage payment compared to a 30-year mortgage payment will fit into your overall plans. Now you know some of the major pros and cons of a 15-year mortgage, but you still may have some questions. After all, your mortgage payments can have a big impact on your overall budget. Let's explore some other commonly asked questions when it comes to a 15-year versus 30-year mortgage. First one, is it better to get a 30-year mortgage and then pay it off in 15 years? Well, sometimes it is better to do that. In some situations, it's better to get a 30-year mortgage and pay it off in 15 years or whatever timeline works best for you in your situation. There's a big advantage to this strategy, namely flexibility. To see how this strategy affords homeowners more flexibility, let's go over a few reminders. Payments on a 30-year mortgage are smaller than payments on a 15-year mortgage. You pay more interest on a 30-year mortgage if your payments stretch out for the full life of the loan. And most loans allow you to pay extra towards the principal each month, but you always want to read the fine print for your situation. Now let's take a look at this flexibility in action. Let's assume that your regular mortgage payments are $1,000 each month. Maybe your side hustle is finally starting to take off and you got a little extra cash coming in each month. Now you're able to pay an extra $1,000 a month toward your mortgage principal. This is awesome news because you are now on track to cut decades off of your 30-year mortgage. After making these double mortgage payments for several years, your family situation maybe changes. Maybe you welcome a new baby, or maybe a parent returns to work and a child starts preschool. There are many reasons why a family might need to rework their budget from time to time. If you've been making double mortgage payments, you can simply just scale back to the original $1,000 payment amount without having to juggle any refinance. Thanks to that flexibility, you can readjust your mortgage payment amount as often as you'd like, as long as you're covering the amount written in your 30-year loan. Another question that some people might have around this area: how can I pay a 15-year mortgage off early? Yes, it is possible to pay a 15-year mortgage early. We did it in less than 5 in our family. There are 2 main ways you can pay off your mortgage early. That's increase your income and decrease your expenses. Some people might choose to increase their income by starting a successful side hustle hustle. Other people land promotions at work or change careers to grow their earning potential. No matter how you increase your income, you can use this extra money to pay off your mortgage early. Of course, you might also find yourself in a windfall situation where you've got new money coming in. Perhaps you end up with an unexpected tax refund, a bonus, or even an inheritance. You can pay off a 15-year mortgage early by making a one-time lump sum payment and make a big dent into your mortgage. Are you ready to weigh your options and see which mortgage is best for you? Well, give Credible a try. They can help you look at specific numbers tailored to your budget and the housing market in your area. Then you can see the pros and cons of a 15-year mortgage in action. Enough from our side, everyone. We want to hear from you. What do you think of these pros and cons of a 15-year mortgage? Where are you on your mortgage journey? Please let us know in the comments below. And by the way, if you want to access any of the links mentioned in today's video, they will be in our video description. This is Andy Hill from Marriage, Kids, and Money, signing off. Carpe diem.